Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted again to be able to speak to Exec Chairman Jay Lecoque and CFO Tony Ratcliffe of SourceBio, a leading medical diagnostics and lab services group. So welcome, gents.
Thanks, Paul. Good to be back.
Yeah, well, big congrats on today's record results. But before we sort of dig into the detail, Jay, I don't suppose you can quickly walk investors through the quite literally transformational acquisition of LDPath last month for £18.5 million.
Well, that's an important part of our growth strategy going forward. We've always said that the CellPath business was our crown jewel, so to speak. We've got a great presence in the market with the NHS. We've got a great set of wet labs. We were not as penetrated into the digital space as LDPath is. We started looking at potential acquisitions last year. Obviously, we've talked about that. And we found that this company had a LIMS system that was plug and play for both NHS and private hospitals. And really, already the majority of their revenue was from digital pathology. So we really wanted to add this to what our offering was. And the combination of the two businesses is going to turn the UK pathology business really upside down and bring it into the next generation.
And how big is this market? I did see a stat that the NHS spends literally on sort of cancer diagnostics, something like £2.5 billion a year or something absolutely crazy. And can you just talk through the growth of that with the outsourcing, and likewise the sort of like the move towards digital, the importance of it in terms of accuracy and time saving and also cost saving?
Well, let's just take a step back. There's an underlying issue with cellular pathology in the UK. There's a shortage of pathologists, and because there's a shortage, outsourcing is a growing business and a growing need for the NHS and private hospitals to be able to outsource and get the results back in a timely manner. That's number one. Number two, you had COVID take out elective surgeries, and so now you've got a huge backlog of elective surgeries that are now coming back into the space. And then you've got the regular growth of cellular pathology that was there before the pandemic. So you've really got three engines here that are moving this business forward. And then digital is simply going to make everything easier. I mean, you can digitize an image, you can send it around the world, you can get multiple opinions from pathologists. Your turnaround time goes from 3 to 5 days down to 24 hours. And so digital, we believe, and we're going to work with the NHS and private hospitals, is going to help reduce this massive backlog. And most hospitals right now are trying to get to digital as soon as they can. And we've got a system in place now that can help them do that with a proprietary LIMS system that we can just plug them in to our network, and it's a plug and play. So it's not a big capital investment. We can do a lease arrangement. So it's just a very sound business model for where the market is today.
Yeah, and just in terms of that sort of like, underlying growth. I mean, we've got this huge mountain of 6 million, we know, of elective procedures, and there's apparently another 10 million of people who should have actually been diagnosed who haven't actually come forward yet. So that's going to drive years and years of but actually the bigger picture, or the bigger opportunity, is not just that Himalayan mountain. It's actually seems to be the NHS realizes now that it needs to actually diagnose people early in the patient journey for cancer, or particularly for lung cancer, rather than late stage. And currently, I understand, is only 20% of people diagnosed early, and they've set themselves a formal target to get that to 75%. So presumably that's going to be a huge tailwind for you guys.
It should be. I haven't heard the stat of 75%, but that's a good indication of where the NHS is placing its energy, so to speak. And we do know that there's a big push to go digital, and there has been. It just hasn't had a lot of traction. But there's another big investment coming. I don't know if it's 6 billion or 7 billion coming from the NHS. We know there's a lot of NHS hospitals that have digital systems that don't know how to use them. We can come in and plug them in. So this is the right time, and sort of the perfect timing for this acquisition to be a member of the Source, pathology business.
Yeah, and Tony, how is the integration going? I mean, I don't know how involved you are in the integration, but I guess everything of the back office systems is going to be falling to your.
Absolutely. Well, it's going well, Paul. And I think the reality is, as you'd expect, I mean, essentially we did a lot of the thinking before the acquisition closed. So no surprises, obviously, post-deal. But the main thing is we've already got a plan and are now executing the plan. But honestly, the real challenge that we're having is actually scaling up capacity. So this isn't about cost savings. This is about, getting as much volume from that market opportunity through as fast as we possibly can. And yes, there are going to be decisions about unifying pricing, getting onto, a single limb system, and all those kind of things. And we've already, shaken hands on all those kind of big decisions. So it's early days, but absolutely going well and to plan.
Okay, and then Jay, I mean, that's a perfect segue into how fast would you, just indicatively, I mean, it's difficult to say, this enlarged group likely to grow going forward? What would be sort of like over a 5-year period, the annualized sort of growth rate you would hope to achieve?
Well, I don't want to forecast growth, obviously, but if you consider that our CellPath business was growing 40% a year for the past 2 years prior to COVID, it was up 80% the first quarter of 20 before COVID. And it's now back to being it's now back to a very high growth rate, especially with this bolus of elective surgeries coming. So I won't pick a percentage, but LDPath saw the same growth rates on their side of the business. So if you combine the two plus the movement to digital, I mean, you should be seeing some very good growth, not just short term, but longer term as everybody moves into the digital space and I believe we're going to become the provider of choice for the NHS and private hospitals.
And presumably, to put some AI into that as well, to sort of like, to continue improving the quality and the accuracy and also the speed of it.
Yes, I'm glad you mentioned the AI piece. I mean, I neglected to mention that before. That's another attractive portion of what LDPath brings to the table. And yes, we've got AI capabilities. You've got just some very solid capabilities we're going to be bringing to the market soon.
Great. We'll look forward to hearing about that. Now,
Yeah.
Tony, you've done a fabulous job in terms of generating a mountain of cash at the end of the year, which we seem to be obviously investing. Can you just take the investors through the sort of key messages from the record 2021 results?
Yeah, absolutely. I mean, obviously, PCR testing has dominated the results. I mean, that's clear. We did something like 2.1 million PCR tests in the year, cumulative about 3 million. But I think we shouldn't get away from the fact that actually it's the underlying core business where I think we're most impressed about seeing the growth. So we've had essentially 19% of organic growth from those there's 3 core base businesses, and that's really key, including the cell pathology, which we've just spoken about. That actually grew 78% in the year. So that's all key. And I think you're right, though. I mean, it's been very much a team effort in terms of this sort of execution challenge of building scale, collecting cash, getting that cash conversion, and so on. And obviously, that's built a very, very strong balance sheet, which we're clearly putting to work. We've still got a substantial cash resources. I think we mentioned north of 15 million post LDPath acquisition. So we've still got a lot of firepower to build our business organically and inorganically. But I think the main thing for me is I think the team have had the challenge of building scale and turning the handle and turning that to cash as fast as they can through PCR. And I think now those very same skills need to be fed back, particularly into the cell pathology business, where we're seeing quarterly growth rates that you might think are annual growth rates. So I mean, it's moving that fast. So I think it's the same skills that we'll use going forward.
Right, and that 15 million pounds, actually, just doing the maths, that must be around 20p per share, I guess, or something like that, isn't it?
Yeah, exactly. It's material. Yeah.
Yeah, and what's the? I mean, just to finish it off on the numbers, I did see there was a sort of like a claim by the HMRC just on VAT. Can you just quickly talk through? I know it's difficult. You can't really talk about it, but just really time scales, people.
Yeah, that's right. I mean, it's relatively new to us, and I mean, there's probably not a lot more I can say than they said in the RNS anyway. I mean, clearly, we've approached the VAT treatment of PCR testing under, clear advice. The advice that still holds. Taking other opinions, it still holds. So in our mind, we're very clear about what we've done. We think it's correct. I mean, we could think about the HMRC, motivations and interpretations. Whether they make sense or not is another matter. But the truth is, we will fight the, opposition absolutely. Clearly, we don't believe there's a likelihood of us ultimately having a hit, which is why I think we provided it's very clearly a contingent matter. Early days, let's see how it pans out, but it's certainly not what we're expecting.
Yeah. Okay, well, just moving now to the other 2 divisions, Jay, can you just walk us through sort of like, genomics and stability storage, and sort of how you see those 2 sort of platforms going forward as well?
Sure. Genomics is doing very well. As you know, we've got Sanger sequencing and NGS, and we've also just created a precision medicine business unit that's going to roll up under Genomics. And that's a combination of both our old ref lab out of Nottingham, and then we've got some NGS capabilities and clinical trials capabilities in Cambridge. And we're going to put that together and have a dedicated precision medicine sort of mini business unit, which is a very highly sought after set of tests for many hospitals and pharmaceutical companies as they develop drugs and treat patients. So we are, I mean, one example is EndoPredict. We've got a relationship with Marriott out of the US, where it's a type of test that can tell you what chemotherapy treatment would be best if you happen to have breast cancer. That's the type of personalized medicine that is really coming to the forefront of the industry today. We're positioned very well to get into that. That's going to fall under Genomics. I don't want to oversell it, but we really believe it's a very good place to be. Stability storage, again, regulatory requirements to store drug compounds and finished products. So it's not going away. It's an annuity stream as far as we're concerned. It's growing, high single, low double digits. And it's just a very solid business for us. And we're looking forward to potentially expanding that. We've just expanded some space in Tremor and the US, and we're hoping to get more growth out of the stability business in those two sites.
Great. And then just finally, Tony, on the COVID testing, infectious diseases, obviously it's been a, sort of like, you've helped really save the UK. So thanks for that in terms of the PCR testing. Now, obviously, they've changed all the rules in terms of travel and the importance of, the need of PCRs going forward. We'll still need them, but obviously nowhere near as much as we did. What's the sort of plans in terms of that division and repurposing the equipment and resource?
Yeah, I mean, that's a good question, Paul. So clearly we've built, very substantial scale in terms of, lab space, in terms of sort of procurement people, etc. But, it's very clearly being wound down. We're reactive to the market appetite. The market appetite is drastically reduced. That's absolutely clear. It hasn't gone away, though, completely at all. So there is a level of business, and we're happy to, support that going forward. But I think you'll see in the nuance of the RNS and the text. I mean, we don't see this as a core business in the same way that cell pathology, for example, is absolutely core, absolutely key going forward. So, sure, there's an element of revenue, an element of earnings and cash generation going forward, far less material. But importantly, actually, some of the investment we made into that business unit has not been wasted at all. Clearly, it's generated substantial earnings already and cash already. But in terms of the laboratory space, I mean, look, the timing couldn't be better. We've got this kind of edge. Whilst PCR is coming down, we're seeing elective surgeries increasing, and therefore, can absolutely use the lab space, repurpose that for increased cell pathology throughput. Most of the equipment actually been repurposed to our genomics business in Cambridge. And obviously, we're very keen. We've had a lot of people very keen to try and sort of, find holes for as many of those as we possibly can within the business. But without a doubt, PCR testing is not part of our, fundamental strategy going forward. But we'll try and have an orderly sort of wind down as best we can, and I think we're on track to do that.
And Paul, could I add to that? I think it's important for people to understand that we were a very successful business with cellular pathology growing at 40 to 80% a year prior to COVID. We pivoted. We went into COVID as a hedge against the business because we knew elective surgeries were going down. So by moving into COVID and helping the whole effort on the pandemic side, we actually did some very good things for a lot of people, and we were able to build the business back up so we can generate earnings to purchase things like LDPath. So I think that it's important thing is COVID had a place within our history. But before COVID, we were a very successful growing business. And after COVID, we're going to be a very successful growing business, especially now with the addition of LDPath on top. And that's one thing that I'm not sure everybody always understands. They might think we're just a COVID business. We were well more than a COVID business before we got into COVID.
Yeah, and now that you've got sort of like another 15 million of cash at least, etc., without having to raise, sort of like any debt or anything like that, which you could obviously raise just because you're very profitable, etc. Where's the sort of like the focus of the investment, internal, external, more M&A, or where?
Well, I think it's a combination of both. One, organically, we're going to invest. We're going to move the site in Cambridge to a bigger and better facility. That's going to enable us to grow the business even faster. Certainly, we'd be looking at pathology opportunities if they make sense. There might be an opportunity to get something in the United States so we can almost start this sun never sets service that we're talking about. Internationally, we can grow. We can get into India, we can get into Australia, we can get into the Middle East. There's a lot we could do with the CellPath business once we go digital.
And is this Jay, is an important point for investors? Is this turning into a platform now rather than a services, just, you know, services business? We're talking of a global platform that is basically, you know, people can lift and shift business into this effectively, you know, platform anywhere in the world.
Yes, you can share images around the world and get opinions from pathologists all over the world. Royal College is going to be important for the UK, but in India that may or may not matter, and we could put more pathologists from, let's say, the US or somewhere else. So yes, it's a good word for a platform. And also this LIMS system I talked about is a way for us to connect with the NHS hospitals and share results with them in real time. And that is going to become almost a tech service, not so much a pathology service. It's both. But once you plug in a customer to that type of service, it's a pretty sticky contract.
And what about outside of sort of pathology? I don't know, Tony, is there any other plans, sort of like, you know, organic or whatever?
Yeah, I think, Jay mentioned genomics. So the Cambridge relocation is the genomics business. It's not pathology. So, you know, that's an example of very much an organic, you know, investment that's clearly driven on the back of obviously the growth we've seen, 18% growth last year. You know, we're expecting some you know, interesting growth rates going forward from genomics, and with the precision medicine too. We're kind of adding fuel to that. So absolutely, we need to, you know, provide the facilities for people, you know, the working capital challenge, if you like, with building organically. And
if we saw a precision medicine business that was, you know, worthy of buying, we'd certainly take a serious look at it. It might be a nice additional set of services we could plug into our group.
Okay. Well, you've certainly set the bar pretty high with LDPath, Jess. Trying to find something like a crown jewel like that at a reasonable price is going to be a bit of a big ask, but hey, you're the man up for it. Now, do you just walk through the sort of trade, you know, the Q1 trading sort of like, you know, view? Because obviously we've had Omicron at the end of last year, and also in January, sort of delaying electric procedures to a certain extent in the NHS right at the start. And then we've had the Ukraine conflict as well, and there still is a lot of NHS stabs and absentees. But you seem to be on track regardless.
We're doing well. I'm going to let Tony actually handle that question. Yeah, he's always better at it than me.
We're certainly on track, on plan for the first quarter. Absolutely. I mean, what's probably setting the whole thing alight really is the cell pathology growth. I mean, what we saw last year was close to 80% growth Q2 on Q1, about 60% growth Q3 on Q2. You mentioned Omicron in Q4, so that was pretty flat. So we see, and then we've had a sort of similar level of growth in Q1, and that's before we've even added LDPath on top. So we're seeing, I think I mentioned earlier, we're seeing basically sort of what a pretty racy annual growth rates on a quarterly basis. So that's not to say that's a forecast and we can extrapolate that going forward, but we're absolutely, you know, challenged really with, you know, getting as much throughput as we can on the cell pathology side. That's key. The other business areas are doing fine. Clearly, genomics is an interesting growth rate. I think it's fair to say stability storage, the growth levels are perhaps more modest. It's more like a SaaS or the software model. We're taking recurring revenue in small slices, so the absolute, you know, growth rates are smaller, but, you know, we're getting quality of earnings. So we've got quite a nice mix of, you know, racy growth, perhaps you know, steady but very positive growth, and then obviously quality of earnings and high profitability in the stability piece. So it's kind of a nice mix really.
Good. Well, I mean, hey, when the weather gets a bit warmer and there's less sort of like impact of stabs absentees in the NHS, then you should have a pretty good Q2 and Q3. But that's my view anyway. And I would point investors to have a look at the updated note on from Liberum. I haven't managed to get hold of it, but I saw the sort of the last one, and they had a price target of 220p, and the shares are just south of 120, and even at £1.20, you know, the shares currently trade, I think, on something like. How much is it EBIT? Just less than 11 times EBITDA for this year, falling to 8.6 times EBITDA. And that's on, again, I'd point to investors on relatively modest expectations for EBIT margins and EBITDA margins. So Tony, just wrapping this one in the 3 to 4 years time, when you get that scale coming through from the pathology, where would you like to be? Well, I know obviously you'd like to be as high as possible, but sort of like the target, just the broad brush target for EBITDA margins, because you obviously.
Yeah, I mean, I think in general terms, I think we can say, I mean, obviously if we go back to sort of pre-COVID, I mean, we were essentially a, you know, a 15 million pound business generating 3 million EBITDA. I mean, even coming out the other end of COVID, you know, we're essentially looking at a substantially larger business top line with a substantially better margin bottom line. And so I'd absolutely like to see the growth rates continuing at the top line. I think, you know, if we're generating a gross margin of 40%, slightly above, you know, overall across the business, then that's a good place to be. And what we should see is the bottom line EBITDA certainly, you know, crossing 20% and getting up to 25%. I think that would be a reasonable sort of metric overall. So absolutely positive. And importantly, you know, although we've, you know, got a technology, we've got platform, we've got IP now through LDPath, we're not a biotech, we're not a heavy sort of R&D burn sort of business. We're not having to sort of invest in R&D as such to any great scale. So, you know, we're generating real earnings and real cash, and obviously we expect the magnitude of the numbers to increase going forward.
Great. Well, I look forward to that. So just wrap it up then, Jay, in terms of news flow going forward. We have an update at the AGM in June. Is that the sort of the next sort of timeline? Unless you're obviously going to pull another rabbit out of the hat and buy something.
No, I mean, certainly AGM is in June. I think what we're also going to be a little bit more effective at is communicating some big contract wins that we think we're going to have coming forward, especially on the digital side. So there's good things happening with the business. We'll make sure we communicate that properly.
Great. Okay. Well, big congrats again, guys. Terrific numbers and really exciting times ahead for you guys. So well done, guys, and keep up the great work.
Thanks, Paul.
Thanks very much, Paul. Take care.